And the end of that music and all that legalese means we get to, just a money-making part of my week, Trade Masters, where coaches bring 3 picks, analyze them, talk about why they like them. And then we can all take them home, decide what we want to do. There's been some good ones in recent weeks. There's been some good ones all year, to be honest. I love midweek picks. You get busy during the week. I love it when stocks get broken down by people that been around for a little while. And we got 2 of the best here tonight. Defending champ, Tyler Craig, met on fire, just slaying all that would oppose him with his little lightsaber in his path. Tyler, looking dapper tonight. How are you doing?
Doing good. I'll leave it at that. Go ahead.
There was hesitancy there. Queen, out of respect, he wanted to talk. I know what was going on in his head. I know this young man very well. He wanted to talk trash. He wanted to, but he's like, but I'm going up against the Queen. I can't be disrespectful.
Indeed.
How are you doing tonight, Emily?
I'm doing good.
I'm right, aren't I,
Tyler? Scared, Tyler? Don't be scared, Tyler. You can talk trash. You're not going to hurt my feelings. I can talk trash too.
I was gonna play out the lightsaber reference, but nothing witty came to mind, so I passed.
Well, hopefully something witty, doesn't have to be witty, but it should be a good trade comes out. Listen, let's get right to it. I love it. Let's break them down. Tyler, you're defending champ. Who do you want to go first?
I'll let M go first. Kick it off, M. Let's
All right,
see.
and tonight we're going to do 3 anything goes because they talk to the coaches like, what are the best picks you got? What do you got out there? Anything goes. So no delta, no theta. Your 3 best picks on Wednesday, August 11th. Emily, start us off.
All right. Well, let's just head to the area of the market that is starting to pick up and show us some strength. Let's go to basic materials. If you can give me a chart on XLB first, and we can kind of see that nice little breakout that we had that followed to today. Beautiful chart. And we looked at some trades here on the lab on Friday, but this is an area of the market that obviously we can see money is shifting here. So I like to go looking for where everybody is. I like to keep my trading very simple. I like to be where everybody else is, right? So going through all the different possibilities that I was looking at, give me a quick run through on a couple of these. WRK, you can kind of start to see them starting to move right there at that. Is that the 50?
Yep.
The 50, it's just touching the 50. You can take a look at DD, kind of similar situation.
Yep.
And take a look at CE. Already out and gone, and then SEE actually.
So SEE?
Mm-hmm. So you can see that this area of the market is taken off, right? So I like to go looking for something that is, potentially going to do the same thing. Maybe it's been a little bit lagging and it's trying to do the same thing and catch up, right? Play catch up. So let's take a look at Dow. So Dow is finally out of that, kind of like head and shoulder, inverted head and shoulder, kind of broke out of that there. And now we're looking to see whether they're able to continue in this momentum, possibly get us back up to, I don't know, maybe where that support level was at 67, maybe break out of that and give us another level at 70, 71. We don't know, we'll see, but there is clear room to the upside. And I like this for what I'm about to do. So for things where I want to play directional, but still want to do a little bit of cash flow, I like to do broken wing butterflies. So for this one here, what we're going to do is because, I'm still on like vacation mode. So I want to go directional, but I don't want to be, ahead of myself and starting to manage things if it doesn't go my way, or if it takes forever to get there. So I kind of like want to play it where, I do get a little bit of directional exposure, but I also pick up some cash flow. So if we go to the trade tab, we are going to look at that September monthly. And we're going to buy the 62.5. We're going to buy 1 contract of the 62.5. And then we're going to sell the 67.5. So we want to sell 2 of those. And then how it becomes a broken wing butterfly is that I'm not going to make it the same dollar distance, right? The 62.5 and 67.5 is $5. So to break it, I'm not going to do the 72.5. I'm going to buy the 70. And that's what makes it a broken wing butterfly. So if you throw that on the Analyze tab, you can kind of see what I mean, right? So you have the bullish side or the upside a little bit open, where if the stock does kind of blow through where I think that that tier 2 will be at 70, you can still make a little bit of money. But where I'm anticipating it kind of starting to slow down and just kind of like, hold at resistances between 67 and 70, right? So anywhere within that range is where I'm looking to pick up the most of my gains, right? It's low cost entry, $1.83. That meets my risk tolerance. So for this one here, I don't even need to put a stop loss on it because it fits within my personal risk tolerance, right? If it doesn't, then obviously find a level of support that you would want to put a stop loss. But for me, this is the one that I don't even have to bother looking at it. If it blows through, okay, I won't make as much. I'll make $67 max total. But if it does stay in that range, I'm looking to make about 310. So the risk is $1.83 to make 310. Not a bad ROI. And that is my first pick of the day.
Give me the daily chart, Tyler, again. 67, 68. So, I mean, if we go to the moon, right? Like I like playing out scenarios in my head. Stocks can do, certain things. They can go up and they can go way up. They can trade sideways. They can go down. So if we just went to the moon and blew past that, what was the general range of our max profit? 66 through 68?
Yeah, so if it stays within range and stays underneath 70, we'll make that potential range of like 310. But if it does blow above 70, the max we'll make is about $67.
So, I mean, a profitable, not ideal, but a profitable, if it just takes off, still make a little bit of money. But I like how your general max profit range, and butterflies are advanced strategies. We teach them at tackletrading.com in our cash flow club. We got a lot of material on butterflies. So if you want to know more about butterflies, sign up for a free trial. Email me at team@tackletrading. I'll direct you to all that content. But the basic concept of a butterfly is that you're buying an option, you're selling two against it, and then you're buying another one, creating the wings of a butterfly with the body on the options you sell. And what it effectively does is it creates you a what is the right term here? A known risk. You know exactly how much your max loss can be. No matter what, you can't lose more than the debit you pay. But it can create situations where if you do get directional movement, you can have some favorable risk reward scenarios. And you can have all kinds of other scenarios. And I love how lazy you are, Emily, right? I'm going to find a way to go directional on a good setup without having to worry about it and manage it. So that if it does go up, if it goes down, I don't have to hyper manage it. I know my loss, I know my risk, I like the risk reward. But what I like about butterflies is because like some people, when I see some people do butterflies, they do them blindly. I'm just going to throw it out and hope it sticks. What I like about good butterflies is that you're targeting that max area at a logical place in the chart. It's a totally logical scenario to see materials, which are hot, get a little bump, go on a little run in the next 30, what do we got till expiration? 37 days till expiration, and then stall out, right? I mean, that's more plausible than if they were just to go to the moon. And so I like where your max range is, and what's the ATR on Dow right now? $1.48. So you got 3 or 4 ATRs. I mean, that makes a lot of sense to me. So the max profit zone, slightly below the resistance level, makes a lot of sense to me. Area of the market's hot, right? All kinds of things that you could do in this area. A unique and creative choice on how you would play materials. A opening salvo. And just for final thing, that was to buy the 65, sell 2. What was the exact?
62.5.
Buy the 62.5.
Sell the 67.5.
Writing this down for Mark from Salt Lake.
Rewatch the video.
Yeah.
But 62.5, 67.5.
Sell 2 67.5s and 170. If you want to learn more about butterflies, we do a lot of that at Tackle Trade. Teach a lot of good core stuff. Got a lot of options strategies that are very advanced. but simple to execute, like the one that Emily just showed. All right, opening salvo fired. Tyler, what do you got for us?
Yeah, I like that trade, Em. Good structure. Well done. All right, so another area that's been perking up here. We've been talking about this the last few days. With the cyclical theme, basic materials we kind of classify as a cyclical sector. Another one in that space is industrials, which were a nice leader today. You take a look at the ETF performance, who was leading, who was lagging, and here is XLI, neck and neck with basic materials. So I'll match the focus on what's leading right now with the industrial sector. You think industrials, you think Caterpillar, you think Deere, but some people maybe forget airlines are also categorized in the industrial sector. And airlines also have the other benefit of kind of moving with the reopening stock.
You mean they haven't created the official go out and party stock sector yet? Is that not an official classification yet?
Not that I'm aware of, but
the COVID epicenter stocks, that's not an official classification. They're still in industrial.
No, but if you draw a Venn diagram of the party reopening stocks and industrials, where those overlap would be airlines, Mark.
Okay.
So you've got both angles of attack with airlines. I like what I'm seeing in this space. I think industrials heating up helps. I think the reopening plays doing better after last week helps. And Jets is the airline ETF. I was taking a look at this. On the weekly chart, you've got a weekly retracement to a known level of support. This thing got very oversold. As Mark knows, reopening stocks did not have a good summer. A lot of them fell 30, 40%. But finally back to a level which ironically takes us back to the COVID vaccine.
I know. The symbology of that, right? Because how many times in life in trading do you say, I wish I could go back to that date because I should have known, right?
Yep.
And I bet you a lot of people early in 2020, I knew that when the vaccine come out, I should have bought. Well, guess what?
Yeah. Put your money where your mouth is. And that's the thing, right? I mean, it was scary there for a bit when you're in the midst of the pandemic. You know, maybe airlines survive, maybe they don't. You assume they do survive, then you get the vaccine. It's like, okay, foregone conclusion. And they're 50, 60, 70% off their highs. So that's the play. You know, you smack yourself in the head in March of this year when it's at $29 and you're like, yeah, that was dumb. As you said, coulda, shoulda, woulda. And Jets heard your cry, Mark. They're like, oh, don't worry, we'll go back there. And they came back, and people that had that thought, they like, okay, second chance, let's do this. It bounced at 21. So I think that you've had some very constructive price action, particularly because there were no buyers coming into this, right? Look at the number of red bars, down. They didn't want this at all until it returned to this major weekly support. So I like the recovery. I like
it's almost like they were waiting.
Yeah, it's almost like technical analysis has some gives you a little bit of help to know where are the areas of interest. Indeed, you got a higher pivot low here. You've got an ascending triangle kind of in the making. So there's a lot in this space. I'm going to go with Delta Airlines, DAL, for a couple of reasons. I've drawn a few lines here. The general flow and feel is the same. Airlines tend to have a very strong correlation to each other. And so there's not a ton of differentiation in this space. I wouldn't fault somebody if they liked a different airline stock. They all look very similar. The reason I went with Delta Airlines is a couple of reasons. Number one, I love the double bottom, if you want to call it a double bottom, maybe a little bit of a higher pivot low. Buyers stepped up where they needed to on that second retest of $38. You had a break of the trend line, which has defined the lion's share of the loss or the downtrend over the last couple of months. And I like the pop above the 20-day moving average. First time we've taken that out since the downtrend really kicked off 2 months ago. And it just looks good. And it still pays you a lot of premium when you're selling naked puts and such. So if I believe this 38 support level is like now ironclad, it's been tested, I have confidence in it, I think selling puts anywhere below 38 is interesting. And they'll let you go pretty far out of the money if you want, you know, a bigger margin of error. So I was looking at selling the 36 strike for September, which 36, by the way, would take you back to, this was the COVID vaccine, Pfizer vaccine.
And I do like, once again, I like the symbology of that. I really do, because I've caught myself many times saying, I wish I could have bought X at the November breakout.
Yeah. And if it gives you the chance to buy it at 36, you can do a victory dance and say, look, not only did I buy it where I wanted to, those suckers paid me to do it, right? You feel good about it. So you take a look at what's available down there. September, you sell a 1 month, 36 put, Mark. They're paying you 50 cents, for heaven's sakes, for a 15 delta. Your collateral or margin requirement's only about 360 bucks. That's a pretty good little number lock is on. You're looking at, one more time, 14% return. You've got an 85% probability. I really like this trade. So I'm digging the naked puts in Delta Airlines. There you go.
Okay, so Delta is one of my favorite companies, just looking for setups, waiting for really quality directional setups. You know, I was able actually to, a week ago when it was selling off again, able to get reasonable premium at 25 bucks. You know, so those premium spikes can pop up on Delta. You know, a lot of this is about, you know, from an investing standpoint, what's the price level that you're just like, because the technicals, if you break support, are a little shaky, right?
Sure.
So let's say you're not coming at it from a hardcore Mark Justice, I believe in reopening and screw it, we're going to back to normal. I'm going to put my money where my mouth is, and I don't care. I'm placing that. I've been placing that bet for 17 months. Not everyone has that insane conviction, though.
Sure.
And if we break support, we don't have a lot till about 23, 25 bucks, you know, in that range.
True.
So from a management, let's say someone's just approaching this as a trade, not an investment. And let's say support breaks. You cut your losses?
Yeah. Look, I mean, the market has told you what price level matters, right? And so it's like, if we take out 37 bucks, we shouldn't have, right? Like that is a major change in character on the weekly chart as well. And so you look at what your risk is, you take out, hang on one second, let me make sure I got my date today. All right, look, Mark, you take out 37, you're down 100 bucks. You know, you're risking 100 to make 50. That is fine for a high probability naked put trade. So, you know, so instead of saying, oh my gosh, it's a naked put, my loss is open-ended, take a deep breath, settle down. It's 100 bucks. 100 bucks if it breaks major support, that's your risk.
And it's a big note of caution, because it's not a note of caution, it's practical. If you're doing it for investing reasons, that's one thing. You have a whole set of criteria. If you're doing it for trading reasons and you break support, don't go to the church of hope to manage the trade. You know, support breaks, especially when you have no secondary support underneath, should be respected, especially from a trading point of view. Like the trade, though, like the symbology, especially from an investing entry. That's 2 winners in my book for round 1. Emily, let's kick off round 2. What do you got for us?
All right, we're going to stick with industrials because that is also an area of the market that I have interest in. And you know, Tyler, you know, talked about the airlines coming back, making a comeback. We just passed this big infrastructure bill, right? So there's going to be a lot of companies that are going to be getting some work and some contracts, right? If we take a look at Caterpillar today, had a nice move. I talked about the railroads on one of my labs, I think on Monday. So if you take a look at CSX, we also start to see some movement there. So what other area in this space, you know, is likely to see some, you know, some movement? So I was thinking, well, there's going to be a lot of trash and a lot of stuff being picked up, I guess, if we start doing a lot of infrastructure work, right? So let's take a look at waste management for a second. WM, there we go.
Listen, I just needed 3 tries and that's all. I got it on the 3rd
well,
try.
I did WMT first and I was like, that doesn't look like waste management. So it starts with the W, that's all that matters.
Yep.
So waste management is going to be one of those, like, you know, it's not going to be a short-term play because we know how, you know, this kind of, you know, work is done. It takes a while to get all these things up and going. So this is going to be for more of a long-term play. So when I'm thinking something long-term, I'm always going to think something like covered calls or four boys covered calls, something that I can cash flow over time, not just one time, but maybe 3 or 4 or 5 times. So with waste management, this is going to be a straight covered call. However, being that we're just starting to pick up in waste management, we got that nice little green candle today. There's a possibility that this might have a little bit more appreciation to the upside. So I don't want to necessarily cover that right away. I want to see if it's going to continue to this upside. And then once it starts to find some momentum and slows down, then turn it into a covered call, right? So with this one here, it's going to be a straight directional play on the shares. So buying 100 shares with the intention of maybe when it gets to like 150, 151, we start to see some slowing momentum. If it doesn't break out of that, then covering up with a covered call. So really simple concept. You would have to kind of keep an eye on this and just make sure that you don't miss covering it if it does start to slow down. So this one does require some work, but not a lot. Stop loss for me would be something maybe, underneath those the support level there, or maybe you're looking at the weekly because I plan on being this for a while. So nothing that I'm going to be too concerned about if it does have some choppiness in the next few weeks, but I'm anticipating that waste management we'll see some, some work in the next few months, years, or whatever, if we get this bill passed. So that would be my play on waste management, long-term investment, covered call, starting off with it directionally, and then eventually covering it when it starts to get to some resistance levels.
I haven't thought about waste management. I got a lot of thoughts on this. A waste management company I know very well. Routinely makes my own personal watch list. Hasn't recently for different reasons. But I had a thought occur to me. I love the thing I love about waste management is it has a gigantic, massive moat. You go try to start a garbage collection business and get city and county routes anywhere, right? I don't care. Here's $100 million. Go start the business. You can't, right? Gigantic, massive moat with their existing contracts, existing routes, massive moat. So I've always loved waste management from that perspective. Some of this kicked in here on me because if you look at the chart, that's not trading like industrials. It's trading like a defensive stock. It's defensive area in the market, which makes a lot of sense because waste management is traditionally viewed as a defensive stock, dividend paying, conservative stock that what the business is, right? Like more or less. This is not a stock that has wild fluctuations in its earning reports. Because of their set contracts, because those go out in time, it's a pretty steady business. And its price behavior has been trading in defensive areas, like we've seen utilities in the last month, like we've seen healthcare, like we've seen staples, like we've seen that stability or upward movement. And so when the market got rattled, right? I mean, all of that stuff, that's not how waste management did. And it has the industrial kicker because of the sector. It can have the best of both worlds here, right? Yep. It can trade defensive when defensive is defensive-y, and it can go with industrials because of the composition in the index. That's a rare feat in this market, crossing two, both growth and defensive. Not growth isn't traditional growth, but an area of the market that might be getting caught. That's a 1-2 punch. I love that trade. I love that trade a lot. Unique situation, perfect company in this market. Yeah, that's a good one. I like that. I'm adding that to my own personal watch list. Tyler, she's bringing the heat tonight.
Indeed. All right.
See, Tyler, this is where you would normally talk smack.
Hey, she's bringing out the softer side of me. What can I say?
I think he's saving the best for last, and then he's going to talk all the trash.
Oh, and I like your strategy selection on it too, because one's directional, but with cash flow, defensive stocks, cash flow doesn't. I mean, it's perfect for me. It's perfect for me.
Okay, enough with the love fest. Let me go. SMH.
And Tyler, I hate your pick.
Let's take a look at the tech sector. I looked at this on the halftime report. I really like this retracement in SMH. Semiconductors have been heating up a little bit here recently, especially A&D. First, I think quality pullback you've seen in this after an upswing that increased in momentum, probably over the last couple of months, right? Like Like, so this interests me, Mark, and you found a little bit of buyers here intraday today, bounced off to 20. So I was shopping dips in the semiconductor space. I'm not going to repeat A and D because I pounded the table on that one in the halftime report. But
I got to give you credit, young man. Talk about a textbook perfect call last week on analyzing the overextended, finding a conservative way to play it through an iron con, not the appropriate way. You nailed it.
Yep.
You nailed it last week.
Yeah, I totally forgot, Mark. Good thing you brought that up. That's right. I did nail it. Good. Yeah, I did. So, I feel like I could very well pitch a bull put on AMD, but did that in the Jedi options for halftime report. So I wanted to give you something new. I like Qualcomm has been stealthy, little slow, little steady, but I continue to like this pullback after its earnings gap. And especially the last two trading sessions, it really nailed the landing where it needed to. You look at this 145 level, resistance, support back here, lots of memory, lots of traders, picking their spots around this 145. This is the area that should hold if this wants to remain constructive. And so far it has held the last 3 times. I even like that it got nasty yesterday and came right back. Nice little hammer candle today. I think this is just biding time until you get a pop. Just need a little bit of rotation into semiconductors, and I think you have a nice little upswing in Qualcomm. So bull retracement, sitting at major support. I think this is a clean dip buying opportunity. How you play it, you could do bull puts. I'm actually going to pitch a bull call, but a conservative bull call that doesn't require this to get up that much. We're going to build it where we have kind of a balanced risk reward. So I'm going to build a $5 spread where I'm paying $2.50 to make $2.50. I don't think it's asking too much for this to get the 150. I think it could get there in one day, quite frankly, if it really wanted to wake up. I think a little easy trade here would be buying the September 145 call and selling the September 150. And if I build that out, 150 call, 145, first strike in the money, sell the first strike out, paying $2.35, which means you can actually make about $2.65. So as I said, balanced risk reward, you're kind of sitting right in the middle. And I think 150 is a very easy target. Once it gets beyond that, it's more of a time decay play. We're just waiting for time to pass. I don't think we need that much time. And so I don't want to put it out to October because it would just take too long to make the money. So simple little bull call, 145, 150, a little more aggressive directional way of playing this just to mix up the theta play I already pitched.
And one of the things that new traders usually don't know, and even advanced traders forget, is when you get cyclical movement, semiconductors benefit from that. Just the way they're positioned in the economic cycle and different algorithmic programs. I mean, look at semiconductor price movement post-election. Banks go up, tech doesn't go up. What did semiconductors do? They went on fire, right? They went on fire. And so, if there is even a moderate cyclical surge at all, which reasons to believe there are. I mean, we've been all over that lately at Tackle Trading. On signals, you could see, moderate moves, and I could see it happen. I mean, tech, but I also like the 1-2 punch of how when tech took off a couple months, semiconductors came with it too.
Yeah.
And so it's like a different version of waste management where it could play. Now, could get hurt by that too if tech just gets sold off. Nasty tech, depends. But if tech doesn't sell off much, it just holds. Or if tech, whatever, yields, I mean, anything can happen. I like the duality of this round's picks. Waste management with defensive, with a spark of industrials, the duality of semiconductors in this position. And that's a pretty trend line if you break, a pretty clean signal. So,
well, and that's the thing too, right? Is you could wait for a break of the trend line to give you confirmation. It's hard not to pull the trigger if this thing confirms.
Especially with the support at an area where you exactly expected support to form. when that happens, traders are paying attention, right? When that happens, there's not real fear. It's just a pullback. And if it's just a pullback, that usually leads to a bounce, like the trade. All right, it's been a beautiful show tonight. I expected nothing less from Team Phoenix as they go up against Team Dynasty. Let's see what the final round holds. Emily.
Okay, here's my last one. I'm going directional here, and I'm gonna take IWM. If we take a look at all the other indexes, give me SPY, give me the Dow Jones, and give me NASDAQ, you can kind of see, you know, everything is kind of sitting at that resistance level, right? If you had to kind of rank them, you probably go, you know, Dow Jones first, S&P second, the QQQs next, third, and then last but not least is little old IWM. Now we love, you know, the Russell 2000 for covered for iron condors, and you know, I love that cash flow that we've been making for the last few months. However, we've kind of seen a range of where it's bouncing, you know, off of support and resistance, support and resistance, support and resistance. So I'm looking to see if and when it breaks out of that 50 moving day average. You drew the line perfectly there, Tyler. That it might give us another run all the way up to those resistance.
It's almost like he's a certified market technician.
You would think, right? It's going to take us back to those resistance levels there at 234, 233. So this for me here is acting as two things. One, I still have some iron condors playing right now, right? Not that they're at any threat or anything like that. They're perfectly fine. They're well above those resistance levels. However, if they do take off drastically, this will also serve as a hedge for me on my condors. If they don't, it's still going to be a directional play here. So looking for it to break out of that resistance level there at 235-ish. Looking for it to get to 225 all the way up to 235. So it's going to be a directional call play for me. I'm looking at long term, so give me the October. And I'm going to go slightly out of the money because I am anticipating it getting to that resistance level. So I don't want to pay for it a lot right now. So I'm looking at the 225. There's a lot of volume there on the 225, a lot of open interest on the 225. It's going to cost me somewhere around $730 or whatever the price will be when it does get to that price, but it's going to be somewhere in the $700 range. Stop loss will be directly where the resistance level is. So once it breaks out and goes up, this is a directional play. So I'm going to have, you know, a tight stop loss because it's, you know, I am putting in a little bit more capital into this. So I will place a stop loss right at the resistance level, maybe slightly below that 50-day moving average once it crosses it. And then get it, take my profits at 235 or that range. So a quick directional play here on IWM if and when it breaks out of that resistance level.
Like just quick and directional, right? And where was the stop loss? Break down the stop loss logic.
So once it breaks out, right? So the thing is, you have to wait for confirmation. We're gonna get the breakout. So once we get the breakout, the ceiling, the old ceiling now will serve as my support, right? So once it breaks out and starts to give me a couple of days of upwards momentum, I'm placing my stop loss underneath that 50-day moving average, because that's going to be where my new support level will be, right? You can give it a little bit more room if you want to, but because this is a directional call play, I don't want to risk a lot of money on it. So I'm going to put a stop loss directly underneath that resistance level that it's going to break out and hopefully form as the new support level.
Tyler, give me your thoughts on this.
Listen, this is unfair. Okay, this is very unfair. I just want to give him the title right now because
you ain't winning tonight, sir, unless you bring me like the golden, like, hey, listen, I'm sure there is a trade. Like, you know, 2 weeks ago when you had AMD, I had to give you you better bring out some AMD level, can't resist stuff in the last pick.
Listen, it's my turn to gush, okay? Emily knows I love IWM, and maybe I just need to not talk about it for a couple of weeks and just have somebody else talk about it. And then I'm like, oh, snap. I hope she's right. Yes, that's what I want. Yeah. Get it over 235 already. I love what happened
and
today,
I follow
too.
the price action of IWM. And this morning, you know what I thought was telling? And it's not as bear stop up candle. It was on the intraday chart. Give me a 15-minute intraday. I thought today's price action was fascinating because we've seen IWM sell off and then it just continued. Party's over, right? We're in the middle range. Man, it just said no.
It was garbage this morning. You're 100% correct.
I looked at IWM and I have a lot of small cap exposure through different things. And I was like, naughty. And then it just said no. And this is the type of day where it had and I talk about, like, there was a day like this in oil 2 or 3 months ago, where you were breaking an intraday support level. You had every excuse to continue to sell off. It was there. You had an excuse. Like if it wanted to sell off, you break support, and it just said nope. And then the party was on. I thought that was a telling price action today. Love the pick.
Well, thank you. I learned from Tyler too. So I mean, I got to give Tyler some credit. It's not like I figured all this stuff
You're
out
so
by
great.
myself.
No need. Okay. Already sung your praises, Em. We're good. Okay. I love this pick. Let's see if I can redeem myself here. Okay, Mark,
you brought me 2 good picks. I've liked them both. Just sometimes Jordan is on. Jazz can't beat him. I've been there as a fan before.
All right. Listen, okay. Unity software.
I do love this pick already. I'm going to tell you right now.
Me too.
Okay. Well, look, I ain't going down without a fight. I like this for a couple of reasons. Number one, it is a newer company. Okay. Newer IPOs give you more volatility. They give you a little more excitement, a little more umph. Volatility is higher. You got a little more premium. They're just more interesting to trade. And they got firepower. They have momentum when they get their footing underneath them. So just look at when it IPO'd. It went from 70 to 170 in October, November, December, 3 months. Like, this thing can move when it wants to move. Got a little ahead of itself, came back down, needed a couple of earnings announcements to pass to find its footing, find an equilibrium, builds an inverted head and shoulder pattern in the process. You have lower lows on the left side, you have higher lows on the right side, showing a shift in the balance of supply and demand. Buyers are now taking over. If you were looking at this before this week, you'd say, well, gee, doesn't everybody know what we need for this to get bullish? It needs to take out 114. And oh, by the way, if it does, there's literally nothing on top of it for a long time. So you've got plenty of room to run here. You take out 114. What's the next level? Well, you have this gap area from the last 2 earnings announcements ago, which takes you up to like 140. You fill the gap and you're up at 150. And little known fact, when you look at a head and shoulders pattern, either the normal one or the inverted head and shoulders, there's an embedded price target in that pattern. You take the distance between the neckline and the head, and whatever the height of the pattern is, in this case, it's about 115 to 75. So you're, I don't know, what is that, $35, $40? You take that distance and you add it to the neckline. And I've already drawn it here. That takes you up to like 150. So I think you have multiple reasons to believe this gets to 140, 150. So you look at what happened today with earnings. Whatever they said, the market liked it. It was the spark. Gave you the breakout, went up all day long. Volume was enormous. And I think this has got a date with 140. This is the type of trade you want to do a directional trade on for all the reasons I just said. And because I tried to build a bull put and the premium's crap down there. So it's demanding you do a long call or bull call if you're going to play. I would do a bull call spread. I like the October by the 120, by the 120. And I'm going to October to give a little bit of time. Want to be a little more conservative on these bull call spreads when I'm going for a bigger target. Qualcomm, I was going for a little small target, so I didn't need as much time. But I'm going to go 120, Mark, and I'm just going to go 135. I mean, I'm not crazy. Like, I think it'll get to 140, 150, but I want to build a trade where if it gets to 135, I can, double my money, 150% return, 200% return, that kind of stuff. So you go to October. You buy the 120. Again, $10 is expensive, because this thing moves. So a little more expensive options, which makes me need to do the call spread. So that's got a 54 delta. I'll sell a 32 delta against it. I'm paying $5 for a $15 spread, which means I'm risking 5 to make 10. Why go to 140? I can already make triple my money. So I feel like this is a well-structured trade. I love the chart. It's technically sound. That's my pick.
Sometimes when the cat comes into my lap, I'm like, she likes that pick. That person's going to win. I like that pick. I really do. Everything went crazy post-election in the high volatility world. IPOs, SPACs, penny stocks, everything. It was a feeding frenzy of beauty. As long as you learn to take some profits at some point along the way. And there have been different patterns following the sell-offs that started in February into March and April that emerged. This is one of the ones I like the most. Multi-month consolidation, found a bottom sooner than a lot of those stocks. Got caught up in some of the May volatility where the whole volatility market got beat up for a few days, a few weeks actually. Got caught up in that a little bit, but a pretty consistent price action. I love breakouts on Catalyst and the earnings Catalyst today, which I lock into, because usually if you just break out of nowhere, that can still work. Breakouts on Catalyst, earnings or news or a theme or something, man, they tend to stick at a higher frequency. I was looking down the option chain because sometimes I like selling naked puts down into below. And you can get about $1, which is about 10% unmargined return on the 100s. I like the bulk call spread here. I think you go for directional movement. And if you wanted to do a call and build that into a poor boy's covered call, I mean, there's so many things you could do here, right? And if you have other, if people have other ideas, you can always attend a trading lounge like the one tonight with Greg Holmes. And say, how would you play this, right? Because the breakout signal's there, pattern's pretty, clear air to the upside, checks all the boxes, Catalyst on earnings, causing the breakout. I mean, it's a beautiful trade. I mean, Emily, what do you think?
I love it. I've already built it into my Analyze tab here, and I'm going to see what I can do with it tomorrow.
Yeah, no, I mean, this is one of those, the bring the pattern, and yeah, it's just nice. It's just nice.
Can I say one thing on the trigger real quick?
Yeah, go ahead.
This is showing it's trading down a little bit after hours. It was up 13% today, right? So maybe they packed too much in one bar. Maybe you get a down gap tomorrow. What you want to look for, though, is continuation, or if this opens down $1 tomorrow and goes straight down for the rest of the day, then you wait, right? You wait for a trigger. But as long as it stays above the breakout area, 115, any kind of backing and filling in this area is delaying the inevitable, in my opinion, and it'll go higher.
No, and I like that phrase, delaying the inevitable, because you have the setup, right? Multi-month breakout, Catalyst driving it, stock that can move to that. I mean, so it's the specificity of where you want to enter and how you do that. You should fine tune that as much as you want. So that's an excellent note, that if you get a sell-off, maybe you get a better entry, right?
Yep.
Maybe you get a better, or maybe some of those naked puts down below get really attractive because funny things happen, right? But I do like the directional play here. It's nice. Tyler, I've loved all your picks. Emily's going to win tonight because, give me some garbage collection. And I love I was looking at that IW price action. I was like, man, this is telling. I literally today was like, this is crazy price action. How do I play this? I know you think, I just never even think about directionally trading at IWM. I use it as a base index. I love it. I love your picks, Tyler. I mean, I can't. If you'd have told me before the show these picks would have been the picks, I'd be like, Tyler's going to win. Not going to happen tonight. And congratulations on a thorough beatdown of Mr. Tyler Craig.
Well, thank you. But Linda's asking if this could be a tie. I don't mind sharing the title with Tyler. You can have
No.
It could be a tie if it was a tie.
Listen, I win either way. Okay, I might be long lots of shares of IWM, so I want your trade to work.
Great. Listen,
Awesome.
and seriously, I'm not even messing around. I'm not one to like toot our own horn. We're not very good at marketing and tackle trading, but I swear I don't think you are going to find a better group of analyzers and traders anywhere in the world. And I'm not exaggerating. I'm not saying that because I'm the home team. I believe that this is a community that brings you outstanding education and analysis. That is a hard 1-2 punch to find anywhere in the world. If you're not a pro member, give us a try. This is a great community, and keep watching Trade Masters. Tell your friend about it. Do the marketing for us. It's a great place to learn. Tackle Trade is a great community to be a part of. Outstanding individuals. Thank you both tonight. Congratulations, Em. You get the final word tonight.
Oh, do I get a final word? Well, just keep doing what you're doing. Markets, there's a lot of opportunity there, right? It's a stock picker's market. Go find something. You're gonna find it. If you want to go cash flow, you'll find something. If you want to go directional, you'll find something. Just be patient, do your due diligence, and don't miss a day in the market. You're gonna find something.
We love you all. Thank you.